talk about the Indian corporation in that case, and I know JPMorgan is advising a whole lot of them and helping them raise funds. For one, is the global hunger still alive, given that many of them did big acquisitions, found it a bit difficult to swallow because the recession made it very hard. So in the comeback story, are they still as I would say, willing to take the risk?
Yes, I think you'll be surprised. I think a lot of corporations look at India as a very attractive place to be long term, and so I think you'll see a lot of people deciding they want to grow faster there. We're heavily. I'd buy something there. We're not allowed to, so we're hoping one day we're allowed to buy something there. So most of what we do in India is indigenous. You may know we have 15,000 people there, both in service centers, which go from low tech to very high tech, and serving corporations. Sovereign institutions, infrastructure, money management. So we're pretty ambitious.
And you're waiting for the reforms to allow the banking sector to open up.
Yeah, no, actually, what we're doing is we're going organically. So I'll just give you an example. I'm going to say 5 years ago, we probably covered 50 or 75 companies in India, which means research, equity, fixed income, sales, trading, corporate finance. Now it's 150 to 200. My guess is in 5 to 10 years, that'll be 500. So that's a lot of organic growth, training, hiring in India, and we're going to do it organically. One day we'd love to buy something.
That's because you seem to suggest that even the last time I was speaking to you, that JPMorgan tends to grow a lot organically rather than inorganically unless the opportunity is compelling. When you look at the Indian corporations, do you think that certain sectors are poised to do better? For example, energy in India has seen a huge interest in the shale gas story of the United States. Similarly, we've got a large number of houses going out there for global listings. Do you think that's the play that India would run after, the resources, the energy?
Outside of India?
Yes, but Indian corporations going out.
I think you've seen steel, energy, auto, computer, technologies. I think you can see almost all of them that operate in global businesses are going to be going outside of India. You see a lot of them are listing in the London Stock Exchange now, raising capital that way.
Right. But raising capital, is that something that's probably going to be a little more of a primary interest for Indian corporations? Because they are realizing that the story that everybody wants to buy is the story back home, rather than the one that's turning them into global giants. I
think both. So some of these industry companies compete globally. So, and they need to compete globally because they are what I would call global industries. And so, but you're absolutely correct. A lot of people want to buy India as the best investment.
Right.
So corporations could be torn. Okay, can I stay focused in India and get the highest values, or should I go overseas? Like I said, I think a lot of the going overseas relates to the competition in the global business.
Yeah. You were talking about the whole growth story still remaining pretty strong. There's always concern around a market like India that it might look slightly overpriced. And while growth always does come at a price, do you think that despite what's happening in the rest of the world, it's sometimes too hot to handle?
Look, when you do acquisition, first, I think it's really important. Corporations need to run a good corporation first, and I think to prove themselves organically, kind of earn the right to do acquisitions. Obviously, the higher the prices, the less it makes sense. But when you go to a place like India, you may have to pay a high price to get in, but it may open up whole new horizons for you. So you just have to balance why you would be paying that higher price. In
terms of capital flows, how do you see capital flows panning out for 2011 across the world? Because a lot of people are saying that while QE2 might be a benefit, India and China could be beneficiaries of it, there's the flip side of the risk that comes with very high liquidity opportunity.
Yeah. So here's how I look at QE2. First of all, America has $50 to $60 trillion of financial assets, stocks, equities, bonds, and QE2 is $600 billion.
Yeah.
So relative to the size of America, it really isn't. I don't think people should be that worried about it. If it helps America grow, and I can't see under any circumstance why it would hurt us growing, then it's good for India, and it's good for China, and it's good for the American dollar. The only risk is that maybe it creates too much inflation down the road, and I think the chairman of the Fed has said that they could do a pretty good job pulling it back if they need to do it and try to control inflation. But right now we need growth in America, we need jobs, and QE2 probably is just going to help create that.
So then you buy the theory that if actually United States shows even the slightest signs of solid recovery, then the QE2 impact will probably be spread out because QE2 would sort of end up being somewhat absorbed back in America itself.
Right. Well, so QE2, what they're doing is that when they buy these assets, it creates additional cash that people have to use.
Right.
When they use that cash, they can use it for investing overseas. Why some people are saying someone's going to emerging markets, they can buy stocks and bonds in the United States. They can just leave it in cash. And
right.
I think, and I don't know what the Fed's going to do, but I think everyone wants to see 300,000 jobs create a month, get a real firm foundation in this economy, and so maybe that means 3 to 6 or 9 months before you start reducing some of the stimulus out there.
So you don't necessarily buy the whole banker theory, some bankers who believe that India and China could sort of become epicenters of global inflation. You don't think that's so scary just yet?
Look, you're seeing, I think China's a little different. You're seeing inflation. And China is already taking a lot of action to combat inflation. So bank reserves, and I think you're probably going to see them take action in the RMB over time because that is another tool to combat inflation.
Right.
They're not going to do it really because of American pressure. They're going to do it for their own reasons, and that is a good one to do it. That will reduce inflation, all things being equal.
But that's a great point because China seemed to have reacted well in time. And the criticism that we've been hearing even at Davos 2011 is that India, with its 9% growth, has not taken the tough calls about increasing its interest rates on the time. Do you think that could be a risk in India's case?
I'm not going to say a risk in India. What I'd say is that China did move very quickly. And one of the benefits of their form of government is they can sit around a table and make decisions. India and the United States have a common issue. We're a democracy.
Building consensus.
That's got some wonderful things associated to it. None of us would do without it, but it takes a little bit of a while to get that consensus, between political parties and leaders. And so I do think when the time comes, these countries usually try to do the right thing.
Mr. Dimon, you've been coming to India for some time. You're pretty confident about the leadership, the thinking on policy issues in India?
Yes. I think they're very capable and competent, yes.
If we were to talk about Davos 2011, what are the impressions that you're carrying back about India here? As you know, it's a big splash again this time after 5 years.
Right. I think most people are very optimistic about the long-term trends in India, and so I don't think that's changed at all. I think that's been true the whole time I've been coming. I've been coming for many years.
Yeah. You've been advising a large number of companies that are in some form of infrastructure. Huge ads across Davos, $1.3 trillion opportunity in India. But we've always had the execution delays, the risk that comes with building large infrastructure in an emerging economy. Is that still the most attractive part of the India story, you think?
I think it's very attractive because India is going to be making huge infrastructure investments. Bridges, roads, tunnels, rail, airports, just like China's going to do it. And now America needs to do it too, because I think we've gotten a little behind in our own infrastructure. So it's a great opportunity. To get it right, it does take laws, regulations, how funds are managed. And I do think you'll see outside funds do it when they can get an adequate return on it.
In that sense, you think the Indian central banks, the way they've sort of, central bank rather, has been very proud of the fact that they were very measured during the recession. Do you think that amount of stableness towards policy will remain a case for a market like India, or for that matter, China as well? You were talking about decision-making powers. Are we likely to remain very cautious here in India?
I don't know about cautious, but I would say competent. I think the regulators and the administrators and politicians have been very competent stewards of an economy, and they know what they want to do, and they know what needs to get there, and they've got to work it through, through the rails of government. But I think they've been very competent. I would expect that to continue. Okay,
and JPMorgan, as it expands itself, what are the new pillars that you're expecting to put out there in 2011, 2012? What's the 2-3-year target for you in India?
Well, it's covering more companies. We have a brand new headquarters, bigger trading floors, covering more companies. We want to open branches, so we've asked the regulator to give us permission, mostly so we can serve Indian companies and multinationals that come in. So we want to have the right to do that because it's very important for our clientele, and that's hiring people over time, covering more companies. You don't have to be a genius to think 20 years from now, how many global competitive companies India going to have? It's going to be a lot more than today. And so that growth is not going to, it'll have its ups and downs, but it's not going to go away. And our job is to almost keep up with it. I also remind a lot of people when we build in India, branches and products and services, it's also for non-Indian companies.
Yeah.
Because we help other companies come to India and run their money in check accounts and pension plans. And so our investments in India are really for a lot of companies.
What are the feelers from the central bank towards the foreign banks?
I haven't been there for a while, and I wouldn't tell you if I had a private conversation, but we've always had a very good relationship with the regulators there, and we are pretty sure that will continue.
You were just talking about opening branches. Can you articulate for us in terms of what truly does JPMorgan want to do should there have been no restrictions of the kind that you currently face as a foreign bank?
So the branches I'm talking about are wholesale. So we need to open in more cities so that companies can open accounts, move money, transfer funds, do foreign exchange, trade finance. We need branches to do that. So we've asked for the permission to do that, and we want to get that. And we think, we've made an enormous commitment to India. So we're hoping that they reciprocate. The acquisition one is more about just buying a bank. I think that we can't buy more than 5% of a bank.
Right,
whether it's retail or SME or whatever. We'd love to, 5%, we don't
Does
want
nothing for you?
Does nothing for us.
Okay.
I want to buy a whole bank there. I'd love to own a big bank there. And again, I would promise the people of India, if we do it, we're going to be great citizens there. We're going to help the country. We're going to be there for a long time. We want to develop great products and services and hopefully expand it.
Yeah,
It would be very hard to go to India and for us to open some retail branches and think we can compete with some of your great companies.
Yeah.
We struggle. We'd fail.
Since your ambitions are so large in India, could you share with us what kind of investment figures are we talking about that are already in place in JP Morgan's case?
Oh, I don't. I would tell you that our credit exposures, the way we look at it, in India are in the billions. And it goes up or down because sometimes companies do very large things and then pay us back.
Yeah.
We'd be willing to invest billions more if there was a logical acquisition, and even billions on top of that to grow our other businesses. So you're talking about substantial sums of money. I think the currency war is more a war of mouths. I don't think people have done it.
War of words.
It's a war of words. It's not, people haven't done like really protectionist type of things. I am also thrilled that President Obama took a trip to India.
Yes.
And he saw how good India is and how devoted it is to growing and expanding and innovation and infrastructure. I think it helped American politicians understand how important it is that we all want to grow. And